Hi, folks. I want to talk for a moment about how to get perspective. Um, we are in the throes of a pretty significant downtrend here. This is the daily chart of the S&P Mini, and we're headed, at the moment we're headed lower, right? We're actually down significantly. It is 8:36 in the morning, and we've already seen some pretty significant lows here. I'm kicking myself because I saw this pattern yesterday, and I'm a day trader, so of course I saw it. I saw this pattern yesterday, and I nearly did a video to suggest, you might want to watch for some significant weakness today. Not because I am, like a savant or anything, but just because I've seen this setup before, and I thought there was the potential for another fairly significant push lower, right? Just on a pattern basis. It doesn't always work because you see something similar here, not the same exact candles stick pattern, but very similar. You had a big push down, started up here, big push down, rallied, couldn't take out the high. Arguably could have been expecting things to roll over here. Didn't happen, right? So it's like anything else in trading and in life for that matter. None of this stuff is 100% guaranteed. But I just in looking at this chart yesterday, I thought there was a fairly significant chance that we could get a big push lower. Now I'm going to show you part of the reason why I thought that was possible, and that is the whole perspective notion that I started this video to talk about. Right, so you're looking at the price action here, and you're pretty close to it. And as a day trader, that's what you spend a lot of your time doing, trying to get close to the price action, so that you can both reduce your risk and give yourself more opportunities to profit, right? And then that magical compounding can take over, right? So you spend your time, really up close to the action, right? Like, here's a 4-hour chart. Here's a 1-hour chart. All of which is getting closer to the right now of it all, right? This is a 15-minute chart. Here's a 5-minute chart. That actually looks like a sell signal, like we're going to resume the downtrend. And here's a 1-minute chart, which of course makes it look like we have already resumed the downtrend. So there are a lot of I could have gone up too, right? This is the way up that jumped out too far. Kind of prematurely showed you what I want to show you. But the point is, you can get closer and closer to the right now of it all, and that is very effective for putting yourself in the position to compound, to make small gains, take small risk and make small gains, and have those gains compound as you go over time. But one of the most important things that you can do for yourself in your trading is to, kind of gain perspective on where you are in the midst of it all, right? And that's what I want to talk about here. So if I back this out, right? This is back to August of 2015, right? We had this big push down in August. It looked like we were going to zero. Had a nice rally here, rolled over, found our footing, and took off back to the upside. And this is how we kind of ran into or toward the end of the year, right? Didn't get the Santa Claus rally that everybody was expecting into the end of December, but held on fairly well. Not great, but fairly well here, right? So we topped out here. We didn't quite make it to the highs, right? But we topped out here, rolled over, bounced, and couldn't take out that high. This is always going to be a significant price, right? To me, for my kind of trading, right? And then we rolled over, bounced again, and this is where we find ourselves today, right? Now the perspective that I was talking about is, you always want to be looking for support and resistance zones on your charts, right? You want to be looking for those areas where behavior, may change, or behavior may you may see more voting in terms of whether or not you're right or wrong, right? And one of my favorite zones is just between the 50% and the 618 of the Fibonacci. I developed a setup called my magnet setup on the back of this very indicator, right? And if you don't know about Fibonacci's, if you're a member of the site, you can go. There's a video on Fibonacci. It sounds more complicated than it is, but it's just a matter of it's just about retracing price retracements and different levels that over time have proven themselves to be significant, right? One of them being 50%, one being 618. There are others, 38.2. So again, you can go and check that, right? But here, like I believe strongly that if we get down into this zone, we'll either reverse or we'll spend a bit of time here before we fall through. It's possible that we could go straight through and then bounce back, and this area will either cap it and we'll roll over and keep going, or we could go back through, but this area is going to be significant. That's the point of this, right? And that's why you want to get perspective. You can give yourself an opportunity to see what price levels are important, what people are paying attention to, what they care about, and you can do that by kind of backing out and, for lack of a better phrase, looking at the forest instead of staring very intently at the trees. Okay? So that's going to do it on this video. Again, you want to be able to gain perspective so that you can have a better sense of what you should be doing on the lower time frames, right? I would assume that just because you've been listening to my voice for a while, that if you were going to be anyway right now, you would be short, right? And if you were going to be short, you would be looking at this area as a place to either take profits or tighten up your stop. Okay. So again, hope it's helpful, and we'll see you at the next video.